Hello, you are welcome to this lecture, Unit 2, Section 3. And in this session, we are looking at the Code of Ethics and Conduct. And the emphasis will be on the fundamental principles. Code of Ethics and Conduct, fundamental principles. By the end of the session, you should be able to outline the professional requirement of competence and integrity to be demonstrated by auditors. This is the objective that must be achieved at the end of session 3. Introduction. A distinguishing mark of the accountancy profession is its acceptance of the responsibility to act in the public interest. Therefore, an auditor's responsibility is not exclusively to satisfy the needs of an individual client or employer, but is expected to act in the public interest. So the auditor is supposed to act in the public interest. Now let's look at the fundamental principles that governs the accountancy profession and, for that matter, auditors. We have the principles of integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. These terms will be further explained in the subsequent slides. Now, when we take integrity, the principle of integrity, integrity simply means that the auditor must be straightforward and honest in all professional and business relationships. Now, the principle of integrity, auditors should behave with integrity in all professional, business, and professional and personal financial relationships. Integrity implies not merely honesty, but fair dealings and truthfulness. Auditors should strive for objectivity in all professional and business judgment. Objectivity is the state of mind which has regard to all consideration relevant to the task in hand. It is bound up with intellectual honesty. So when you talk about integrity, it actually entails a lot. Now let's look at the principle of objectivity. Now this principle imposes an obligation on all auditors not to compromise their professional or business judgment because of bias, conflict of interest, or undue influence of others. So you should have an objective mind in discharging their duties and shouldn't be allow the conflict of interest, biasness, and co to affect their judgment. Now, the following circumstances may pose a threat to objectivity and independence. So, when you have undue influence, where others are there influencing your activities, you will not be objective. Or you have overdue fees, you have outstanding fees with the client, it will also impede your objectivity. Then we have actual or threatened litigation. And in a situation where you have been threatened with litigation issues or there's one actually going on, it's going to impede your objectivity. Then we have family and other personal relationships in the client firm. It's also going to impede you being able to perform the audit objectively. And then if you have any beneficial interest in shares and other investments in the client's company, if you are a shareholder, you made an investment in the entity, it's going to affect your level of objectivity because you have an interest there. There is a conflict of interest there. So that also impede your level of objectivity. Now, we say auditors should behave with courtesy and consideration towards all towards all with whom they come in contact with during the course of performing their audit. And they must perform, or they must not accept to perform the work if they are not competent to undertake unless they obtain such advice and assistance and will enable them to competently carry out their work. If they don't do this, their professional the integrity will be impeded. They will not be able to perform the audit objectively. Now, the principle of professional competence and due care imposes the following obligations on all auditors. As an auditor, you have to maintain professional knowledge and skills at all the levels required to ensure that your clients or employers receive competent professional services. And in doing so, you have to act diligently with applicable technical and professional services. When you do this, you are competent enough. You have to keep upgrading yourself, and then you have to exercise due care with your clients and to your employer. Now, let's look at how the principle of integrity, objectivity, and independence can be reviewed, the review procedures. Now, every auditing firm should establish the review procedures, including the annual review, in order to guard against the loss of independence. This procedure should enable a firm to satisfy itself that each engagement may be properly accepted or be continued, and to identify situations where independence may be at risk. Now, such safeguards might include the rotation of the engagement partner, rotation of senior members of staff, and then the inclusion of a manager or other qualified employees in an audit. So if this is going to, you've observed that the auditor will not be independent as a result of familiarity and co. There could be what a rotation of this partner, the senior members, and then any qualified employees of the audit team. Now let's look at the principle of confidentiality. Now, clients expect the business affairs to be kept confidential by the auditors. Now, maintaining a client's confidentiality may mean that auditors cannot blow the whistle on more practices of the client, and hence such more practices will be allowed to continue. Now, it is recommended that information acquired in the course of the professional work should not be disclosed except where consent has been obtained from the client's employer or other proper sources, or where there is a public duty to disclose, or where there is a legal or professional right or duty to disclose. So if the auditor knows or suspects his client has committed an offense of treason, he is obliged to disclose all information at his disposal to a competent authority. So there are exceptions of these rules of confidentiality. And then where there is a public duty or to disclose, example, where an offense has been committed which is contrary to the public interest, it must also be disclosed. And where disclosure is compelled by law, for example, where in an action a member is required to give evidence or discovery of document, then it is allowed to disclose that to the public. But aside that, it has to remain confidential and has to seek the consent of the client before making the information available to any third party. So you remember when you go to organization, you have to go and swear the oath of secrecy. These are all parts of the confidentiality. Now, the principles of professional behavior. The principles of professional behavior imposes an obligation on all professional accountants to comply with the relevant laws and regulations and avoid any actions that the auditor knows or should know may discredit the profession. So this requires them to be truthful in all their dealings and critically analyze issues before arriving at a conclusion. So any act or behavior that would discredit the profession, they have to desist from doing that. So basically, we've looked at the code of ethics and the conduct of auditors, looking at the fundamental principles of auditing. Look at integrity, we look at objectivity, we look at professional competence and due care, we look at confidentiality and the professional behavior. We'll continue in the subsequent sessions. Thank you and see you in the next lecture.